Welcome back. We have an update from Sucro Limited, which trades on the OTCQB under the symbol SUGRF and on the TSXV under the symbol SUG. It's a growth-oriented sugar company that operates throughout the Americas with a primary focus on serving the North American sugar market. Please welcome back its chairman, Don Hill. Welcome, Don.
Great. Thanks, Anna. Pleasure to be back. I think today we're just I think we've got about a 10-minute window. So I think what I'd like to do is just jump right into one of the things that makes Sucro such a compelling story in the sugar industry. For those of you we've spoken to before, sugar is one of those commodities. It's a significant size, attractive market. It's growing, but it's underserved in terms of the demand has actually outstripped supply across North America. And that's put a demand on refining assets. And that's really the niche that Sucro is looking at. We're actually building 3 different cane refineries. And on the slide we've got up in front of you, this is the progress to date in our first 2. Hamilton, Ontario is where we built our first cane refinery in 2018. And Lackawanna, New York is the second refinery location that we opened I think last year. 2023 was our first year. And we're filling that need both in Canada and the United States of this growing market that's underserved. And the capacity that we're adding, we're going to talk a little bit more about an additional refining capacity project we have underway. But you can see the opportunity that when you build supply like we're doing in a high demand market, you have the opportunity where not only are you increasing your sales, which you see along the bars there that are increasing each year, but our margins are actually increasing at the same time. And that I'm sure would strike most people as somewhat unusual. I mean, typically if you're growing sales, maybe you're giving up a little bit of margin or you're facing competitive reaction. But in our case, because there's so little capacity out there, there's very little opportunity for our competitors to react. So we're adding the capacity, and you see that in our sales, but we're also adding to our gross margin. And we would expect to see both of those continue. In fairness, we're going to see the volume continue to grow, and we'll show a little bit more of that in the next couple of slides. And the margin, we continue to see positive growth as well. So it really is a great story on both sides. What's interesting is for a company our size to have 3 major projects underway where we're continuing the expansion and commissioning of the Lackawanna refinery, and we've already broken ground on 2 new refinery projects in Hamilton, Ontario, where we're going to build the country's largest sugar refinery, and also in Chicago, Illinois. And what's interesting here is, and again, it goes back to what I said before about the need for capacity. Sucro is building more capacity, more sugar refining capacity across North America than the rest of the industry combined. So just, let that sink in for a second. No one is building the type of capacity that we are. Even the country's largest refiners are not adding this level of capacity. And so for us, it's a great opportunity. The window is open while the markets are in such demand for this increased capacity. And I think what's an important thing to recognize is not only are we building 3 new refineries, all essentially at the same time or within a very tight window, but we're also increasing, as the slide before shows, our sales and profitability. So, I think it's a real testament to the management team that we're able to juggle the responsibilities of managing an ongoing business and everything that requires in terms of building sales and managing the business, but still going through and managing, and we do self-manage these construction projects where we've got 3 individual projects going on at the same time. And this is really the outlook that you're looking at. From an investor standpoint, this is the clear visibility to growth. We've got those 3 refinery projects in Lackawanna, New York, Hamilton, Ontario, and Chicago, Illinois. Those 3 refinery projects are the path to where we have this growth. So, for anyone kind of looking for businesses to invest in that are growing and that are looking for that clear and visible path to growth, this is a perfect opportunity where we've got the 3 projects. It's all within our control. It's just a matter of building and commissioning and getting the sales out of those facilities. And these are projects that all these facilities are fully funded. It's not to mean that there's not going to be additional capital required years down the road, but over the next 2 years, each of those projects will be started with the current funding in place, which I think is a critical notion. And so if you look at those capacities going through all the way to 29, and then you reference back to the gross margin on that sugar, and right now I think for this year we're looking at about $143 a ton. So if you take that margin per ton multiplied by those additional volumes that we're looking at over the next few years, I think you get a pretty clear idea about what the opportunity is to in terms of adding the value. So I think every investor wants to understand what the value proposition is. And from Sucro's standpoint, again, it starts with what I said before, that we're in a very attractive industry. It's large, it's growing, it's predictable, and it's highly profitable. So, it's nice to know that literally every company in the industry is making money. It's just from a sucrose, and so from a Sucro standpoint, it's a great market to invest in, knowing that we're going to build the business, grow sales, and we've been able to be profitable every year of our existence. You're investing in a business and a team with a proven track record. This is a management team. Jonathan Taylor, the CEO, and myself, we've been involved in the business since day one. We've added seasoned professionals over the last 5 years. And the people who have been involved in building our first 2 refineries are also managing the growth and construction of the next 2 refineries. So again, it's a proven team with a proven track record. You've also, in terms of our record, I mean, we've got virtually an unbroken record of profitability. So this isn't kind of a let's try and fix a business or come up with a new strategy. No, this is the same team executing the same strategy successfully over a number of years. So again, something that investors can have a high degree of confidence in terms of the track record. It's also a business that's demonstrated a very effective use of capital resources. And I think, that's demonstrated by a number of factors. We built our first refinery where we just bootstrapped it, without any financing at all. We were able to manage to build a new cane refinery. And that refinery, although it's small and we're gonna build a new one, that refinery that we built with no third-party financing now has about 6 or 7% of the entire Canadian market. So, we've proven the model with that. We proved how we could build a low-cost refinery. And I think the fact that we've taken it public, the company public, while still maintaining about 77% of management ownership, demonstrates that we've been able to build the business and be effective and manage our cash extremely effectively. We've also got that significant future growth. I mean, we've grown rapidly over the last few years. We've had a compound annual growth rate of our adjusted EBITDA of over 50% over the last 3 years. And yet, arguably, our best growth is ahead of us. I mean, we've got major construction projects where we're going to build the largest refinery in Canada, along with the new refinery in Chicago. So again, although we've had significant growth over the last few years, there's a very visible strategy to achieving even better growth over the next few years. And I think the last, kicker to all this is, despite the high growth rate, despite the visibility to that growth continuing, I think our lack of liquidity, where there aren't a lot of shares trading on a day-to-day basis, has created an environment where we're actually trading at a discount to book value. So you think about a business that's growing their profits 50% a year, and it trades at a discount. And this is a company where we've got incredible growth, it's profitable, we're free cash flow positive, and it trades at a discount to book value. And then I think that all traces back to the lack of liquidity and the small amounts that get traded. But that's a very fixable problem, and that's an issue where I think a lot of companies would like to have that as their biggest problem. But again, when you're running a successful business, addressing that kind of liquidity is definitely an issue that we're going to resolve over the next little while, and something we're obviously very highly confident about. So with that, Anna, I'd like to turn that back to you, and if there's any time left, happy to address any questions there might be.
All right. Well, unfortunately, we don't have any more time, but we do have lots of questions for you, so we will send them to you so you can answer on your own, Don. But thank you for this great update. We appreciate it.
All right. Thanks a lot. Take care.
All right. We'll see you again soon. Okay, everyone, stay with us. We'll be right back with Regen.